Who do banks lend their money to? And is that lending good for the UK economy, or is it actually making things worse? Welcome to Bonkers Economics. This is where we use these images I've created to explain what's going wrong with the UK economy. And this is episode 10 in our series, 12 Reasons Why the UK Economy is Broken. And today we're looking at this image here, which shows bank lending in the UK. And we started by saying, who do banks lend their money to? And of course, the word "their" in that sentence is a bit odd because in fact, the banks are not lending their money, broadly speaking. The banks are creating new money to lend, which they didn't previously have. And so it's a matter of public policy whom they lend their money to, because as I say, it's not their money, it's money the government has allowed them to create. So we are entitled to be very interested in what is going on. And what is going on? Well, this image shows us, roughly speaking, the little yellow bit in the corner here, that is lending to private individuals, that's unsecured loans, that sort of thing. And then the green bit underneath, that is lending to what they call non-financial companies. In other words, ordinary companies that make things and do things that, broadly speaking, improve the quality of our lives. And then over here in this sort of pink color, we've got lending into financial activity. So that's banks lending to traders and financial traders and people who make money out of money, people who use money to extract more money from the economy through the financial markets and other things. Essentially, rich people getting richer by extracting more money from the productive economy. And then there's the big one, the big red one there, and that is lending into the property market. So that's our mortgages, lending to business to buy property, that sort of thing. Essentially, that amount of lending just reflects the enormous size of the property market and the way in which house prices have been going up and up over recent years. So that's where the money is going. And the question we asked was, well, is that good for the UK economy or is it actually making things worse? And we can say, well, this little green bit here, that's probably good for the UK economy. That's money which is going into productive activity, money going into useful things, money going into businesses which will hopefully produce products and services that will make our lives better. And maybe the lending into the private market, into personal loans, that sort of thing, well, that's useful as long as the interest rates are under control. Of course, that's an issue in itself because that includes, for example, credit card lending, where, as we know, interest rates can be astronomically high. So that's not necessarily fantastically useful, but it is necessary and it could be useful if the lending was a bit more even-handed, for example. So that's those two. Now moving over here, well, is it useful? Is it useful that the banks are lending this vast amount of money into the financial markets? And the answer is, well, fundamentally not, because all it's doing, as I say, is making rich people richer. All it's doing is extracting wealth from the real economy. All it's doing is putting money in a place where it can be used to generate or extract more money without producing anything new or useful or productive in the economy. And that sort of takes us actually down to this image below here, which is the activity of trading in the financial currency markets. And here we can see vast amounts of trading going on. This is the trading of sterling in London, and this is the trading of other currencies in London. And this little thing here is the amount of money we actually need to convert into foreign currency every day for the purposes of our actual trade. So you can see that the financial markets have the capacity to absorb huge amounts of money and to use huge amounts of money in their everyday activity, extracting wealth from the economy, not producing anything new, and the lending here is what's going to feed that activity. So not terribly useful, not terribly helpful, and the big red bit, the bit about property, is in some ways, well, I won't say it's worse, but it's in many ways it's equally problematic, because what's happening there is that the money is going basically to push up the value of property. It's the availability of money is to a large extent what dictates the sort of money that people will pay for property. And we've seen that, for example, house prices have gone from something like 4 times average earnings to something like 8 times average earnings over the space of the last 20 or 30 years because the money is there and people are being pushed to put more and more of their income, their regular income, into paying for their property. And the banks are profiting enormously from that because by lending all that money into the property market, they also are able to extract huge profits. And it's really worth noticing that it's the banks fundamentally, or it's the lenders who benefit from rising house prices because they have to lend more money, which means they get more interest paid back. And those of us who are buying houses at those sort of prices, we may think we're getting richer if we see house prices rise, but the reality, of course, is that when we want to buy another house or move up the ladder, move up the housing ladder, we find that we have to pay even more. And even at the end of our lives, when we want to leave our houses to our children or grandchildren, they've got to pay even more for their houses. So the fact that our house price has gone up so much isn't really going to help them. So this is not a particularly useful or productive part of the economy, and all that money going into there is not making anything better for us. It would be much better if property prices were lower, if the banks were lending less money into property and putting much more money into this productive area of the economy here. So yes, we can say that the banks have a significant control and influence over where money goes in the UK economy, and we can see it's not fundamentally going in the right place. It's going places where it's not productive, it's not making the economy productive, it's not providing the money which would allow individuals to make wealth in their own lives. It's simply allowing the wealthiest people in society to extract more wealth, more money, because they've got access to the borrowing that the banks are prepared to make. And the government could do something about this, because in a sense, it's the government's money. I mean, only the government can create money. All new money in the economy is created because the government says so. And the government allows the banks to lend this money, but it doesn't tell them what to do. It absolutely refuses to do that. And it really should tell them what to do, because if it did so, it could direct money into the productive parts of the economy, and it could direct money away from the parts of the economy which are purely extractive. And the more money that went into the parts of the economy that are productive, the more production we will get, the more real wealth we will get, the more money goes into those parts of the economy, the more we can produce for ourselves, the less we'll have to import, the wealthier we become as a society, and the more fundamentally useful all our lives can be. So it's a sort of no-brainer, or at least it really, really ought to be. The trouble is that no-brainers don't cut it in government anymore. The government is so in hoc to the financial markets, is so convinced that the people with the money are the people who need to be served by the system, that it doesn't have any real headspace for trying to move money away from where it's accumulating in the hands of the super rich and putting it into the hands of people who need it to get on with their everyday lives. And that's what this image shows. And so we're talking about what's broken about the UK economy. Well, the banking system fundamentally is broken. The banks are making huge, huge profits. The big four banks in the UK are going to make £50 billion of profit this year. And yet the money is not getting where it's needed to make the economy productive, to allow people to create the wealth that would improve the quality of their lives. So that's the story. Thanks for watching. If you want to get all the data behind these images, you can find it on the website, which is bonkerseconomics.net. And if you're willing to press the like button, if you've enjoyed this video, that would be appreciated. That really helps get the word out. And if you haven't subscribed, please do so. And if you have, thank you very much. And also, finally, if you want to buy postcards of these images, which make quite good conversation starters with your family and friends, you can do that. You'll find a link on the website. Thanks very much.